In recent months, a deeply unsettling reality has begun to emerge for many older benefit claimants across the United Kingdom. New legislation now gives the Department for Work and Pensions the power to ask banks to run checks on certain benefit recipients' accounts. And for thousands of pensioners, this shift is coming as a shock. From the 1st of April, 2026, the government under the Public Authorities, Fraud, Error and Recovery Bill will allow what are known as eligibility verification notices. Banks will review limited data on accounts into which means tested benefits are paid, searching for eligibility indicators such as balances persistently above certain thresholds. This is not blanket access to your spending. The DWP will not demand full bank statements or scrutinize how you spend your money, but that distinction may all too easily be lost in the headlines and in the worry of people who have lived their whole lives on fixed incomes. The first wave of checks will target recipients of universal credit, employment and support allowance, and pension credit. Strikingly, the state pension itself is explicitly excluded, yet for many older adults, particularly those relying on pension credit to top up their retirement income, this policy feels very much like being monitored. Under the new rules, banks will flag accounts where certain risk markers emerge. For example, when savings significantly exceed the PS 16,000 limit that applies to universal credit claimants. That flagged information can then be passed to the DWP, which may launch further inquiry, but any final decision about eligibility or recovery will still involve a human being, not just automated systems. For many British pensioners, who may already be juggling a modest state pension, rising energy bills, and the cost of living, the idea that their bank accounts could be quietly scrutinized has provoked real anxiety. According to media reports, over 1 million pensioners could be caught up in this new system, especially those claiming pension credit. Roughly 1.36 million people were receiving that benefit in February 2025. That number has swelled in part because applications for pension credit jumped sharply after changes to other winter support payments, leaving many households more vulnerable to scrutiny. The government argues that this crackdown is necessary. In the financial year ending April 2024, the DWP estimated that around £8.6 billion had been lost to fraud and error in the benefits system. By enabling these bank account checks, it hopes to detect and correct incorrect payments sooner, to reduce overpayments, and ultimately save taxpayers money. Officials say it could recover up to £1.5 billion over the next 5 years. Still, the policy has raised serious concerns. Privacy advocates, and even some within the financial sector, warn that it risks creating a surveillance-style system, disproportionately affecting vulnerable people, including older adults. While the DWP maintains that only limited information will be requested and that each alert will be subject to human review, critics point out that banks themselves may not be fully equipped to interpret the flags responsibly. Independent oversight is supposed to be built in. Under the bill, a code of practice will set out how banks respond to notices, and an independent reviewer will report annually on how the powers are used. For older people relying on benefits, this feels like a new risk. Angela, a pensioner in her 70s, living in a modest flat in Newcastle, worries that a simple savings buffer she built up over years, perhaps to pay for a new boiler, could trigger scrutiny, even though she has always declared everything to the DWP. Her savings are well-intentioned, yet under these new rules, they might look like grounds for a review. And then there are examples in the public domain. Dozens of pensioners have told stories of being alarmed to find their bank accounts monitored or their benefits questioned, even where no wrongdoing was found. Even more worrying for some is the mechanism for repayment. If the DWP does establish an overpayment based on these checks, it can then use its new power to force banks to deduct money back from the account. That approach has drawn strong criticism from independent watchdogs. The Regulatory Policy Committee, an external reviewer, has flagged the risk of harm to the poorest individuals, especially older people on fixed incomes, and said the department has underestimated the real-world cost of taking money directly from bank accounts, including the administrative burden on both banks and benefit recipients. In fact, some older people have already reported alarming experiences in public forums. There are accounts of benefit debt being reclaimed directly from bank accounts without much prior warning, leaving household budgets in crisis. Others say they were asked to provide detailed bank statements or even to open their online banking for review demands that feel deeply intrusive. For many people over 50 or 60 who may be less comfortable with digital banking or more cautious about sharing financial data, these developments are especially fraught. Still, not everyone is being swept up. The DWP has confirmed that state pension-only recipients are exempt from these new checks, meaning if you receive only your retirement pension, in theory your account should not be reviewed under this particular measure. But for those who rely on means-tested top-ups like pension credit, this is not a theoretical risk. It may become part of everyday life. As we look ahead, it is vital for older claimants to stay informed. Make sure the bank account you use for benefit payments is recognized and correctly linked. Check your letters, and if you are asked to confirm your eligibility, don't ignore it. Understanding your rights and the limits of what the DWP can request under these new powers may protect you from misunderstandings. This change marks a turning point. What once felt like a straightforward relationship between benefit claimants and the DWP is now under far closer scrutiny, and for many older people that has come as a genuine shock. While the government frames it as a fraud recovery measure, the human impact, particularly on pensioners and households living on tight incomes, cannot be ignored. These are not just numbers on a ledger, they are real people who may feel their privacy invaded, their autonomy reduced, and their financial security at risk. Another growing concern among older households is the pace at which these policy changes are being introduced during a period of persistent financial strain. With food prices still higher than before the pandemic and many fixed-term energy tariffs ending throughout 2025, people over 50 are already stretching every pound to cover essentials. For someone living alone on a combination of state pension and pension credit, even a small, unexpected deduction from their bank account could mean choosing between topping up the gas meter or buying a week's worth of groceries. This reality makes the new verification system feel less like background administration and more like a looming presence in everyday life. Many older adults are now quietly setting aside time to organize paperwork, double-check their benefit entitlements, and stay alert to any letters or updates from the Department for Work and Pensions. In an environment where trust and clarity are essential, the hope is that these powers will be used responsibly and communicated transparently, giving pensioners the reassurance they need to navigate the months ahead with confidence. If you found this important or helpful, please like the video, subscribe to the channel, and stay informed because changes like these matter, especially for those in later life.